You are not alone if you find yourself on the wrong side of the market often. In fact, most people that trade in the financial markets lose money, and most people just can't break that cycle. But what you should understand is that the market works in a certain way. It takes from the majority and rewards the minority. Things are set up to be like that, and this will likely never change because people are creatures of habit and move in predictable ways. So you have to adapt to the ways of the market and use the predictability of the crowd to your advantage. When it comes to trading, it's a better idea not to follow the masses, but to do the opposite of what most people are doing. So in this one, I will be talking about client sentiment and give you an overview of what that is. I will also explain why it is useful and show you how to use it in your trading. Welcome back. My name is Chris and I have been trading forex for a while. During that time, I have made many trading mistakes and often found myself on the wrong side of the market. What I eventually learned was that price moved in ways to trick me into trading in the wrong direction, along with the masses. And like most market participants, I would buy the tops and sell the bottoms just before the price turned around. One of the things that I didn't pay enough attention to was client sentiment. This can help you to determine your directional bias so that you can do the opposite of what most market participants are doing. The objective here is to inform you about this useful tool so that you can make better informed trading decisions. Also, if you stick around to the end, I will give you a special promo code to use whenever you make your next deposit. So without any further delay, let's get started. Client sentiment is the collection of position data of buyers and sellers for any given symbol. This data is then aggregated and presented in a way that shows the percentage of clients that are long and short on a broker's trading platform. This can be used as a tool for analysis, and it can give you an insight into the collective opinion of market participants. You can use client sentiment to help you determine your directional bias or to find trading opportunities. However, it is important to know that client sentiment data provided by any forex broker or trading platform is just a view of the client's positions on that platform. Since forex is decentralized, it's not possible to get a complete or 100% accurate view of client sentiment across the whole forex market. Client sentiment can only be approximated, and the larger the sample size of data, the more accurate the view becomes. So, at best, it is a cross-sectional view or a sample of what the market participants are doing. Unlike the stock market that is centralized and all transactions are done through an exchange. Nevertheless, it is still one more tool you can use to get a better idea about what is happening in the market. When used in combination with other indicators, it can help you to make better informed trading decisions. And that is basically what client sentiment shows you. It shows you the sum of all decision making of the other participants in the market or on the broker's trading platform. The cause of this generally comes from different ways people analyze the markets, such as any technical analysis or trading method being used, or the economic, political and social trends that influence decision making. Even client sentiment itself can motivate people to buy or sell. Let me give you some examples. Two moving averages crossing on a chart might be the signal someone is looking for to buy or sell. Someone else might buy a cryptocurrency just because they have read about it being the next big thing in the news. Someone else might be looking at client sentiment and buys or sells crypto just because most participants are doing that. So client sentiment and the indicators that represent this are the effect of any cause that influences or motivates people to buy or sell. And this buying and selling affects asset prices. I will talk more about that in just a moment. But first, let's take a closer look at the sentiment indicators. The sentiment indicators on TIOmarkets website are represented as dials, and they show us the open positions of TIOmarkets clients for each asset or symbol. You can also scroll down the page and select from other symbols if they are not shown here. I will leave a link to the sentiment indicators page in the description. They are being updated frequently. They are also very simple to use, and they should be used as contrarian indicators, meaning you should be looking to trade in the opposite direction of whatever the majority are doing. So, if you see that the majority of market participants are long a currency pair, you should look for sell opportunities. If you see that the majority of market participants are short a currency pair, you should look for buying opportunities, because most people lose money trading. So it could be to your benefit to do the opposite of what most people are doing. As a general guide, when sentiment is in the 40% to 60% range, the directional bias can still be considered neutral. When sentiment is in the 60 to 85% range, the directional bias is clearer, and you can expect the price to move in the opposite direction of whatever the majority are doing. When sentiment is over 85% long or short, then this can be considered extreme, and the move might be close to exhaustion. It's at these points where most traders will be stopped out or close their positions, so be cautious when sentiment is at the extremes. Remember, these are not absolutes. Prices move in a wave-like fashion, and there will be times when price moves with the majority. So it is important to use other indicators too, because client sentiment indicators do have their limitations. The first limitation is that it does not tell you where traders bought or sold or when they will close their trades. It doesn't tell you when the ratio between buyers and sellers is going to change. That can happen at any time. And it doesn't tell you when to buy or sell. The only thing it does tell you is the direction that other market participants are trading in, so it's only useful for helping you to determine a directional bias. Let's look at an example. I am on the client sentiment indicators page on TIOmarkets website and looking at the 6 major currency pairs. The common denominator among all these pairs is the US dollar, and I can see that the market is generally bearish USD, meaning that most market participants are buying foreign currency and selling the US dollar. 86% of market participants are extremely long the euro versus the US dollar. 90% of market participants are extremely short the US dollar versus the Japanese yen. 87% of market participants are extremely long the British pound versus the US dollar. 90% of market participants are extremely short the US dollar versus the Canadian dollar. 93% of market participants are extremely long the Aussie dollar versus the US dollar. This tells me that it might be best to look for buying opportunities in the USD. But since the sentiment is at an extreme for most major currency pairs, the US dollar might be topping out. The only currency pair here where sentiment is not at an extreme is the US dollar versus the Swiss franc, where 57% of market participants are buying the US dollar. So there might be an opportunity to sell, but the signal doesn't seem strong enough. Let's get on the charts to take a closer look. This is a chart of the US dollar index. The symbol on the trading platform is DXA. This index tracks the strength or weakness of the US dollar against foreign currency. We can see that the US dollar has been bullish since May of this year. Price has been making higher highs and higher lows, and the index is currently at a relative high. There isn't enough information yet to suggest that the US dollar will reverse this trend. However, this recent move might be exhausted, and this could be a temporary top. I think it would be best to wait for a correction and reevaluate the sentiment indicators to help support the idea of buying USD but at better prices. Let's take a look at the US dollar versus the Swiss franc. The price action seems quite mixed. There doesn't seem to be a clear trend. The price kind of looks like it's stuck in a range on the higher time frames. However, price might be bouncing off a short-term resistance area. Client sentiment is still somewhat neutral though, so trying to short this currency pair might not be the best idea at the current time. But for a short-term trade, there might be some movement to the downside. Remember, most market participants are bearish the US dollar in general. They are selling that currency against all the other major currencies. So generally speaking, conditions are not that great to execute trades in the majors at the current time. For now, there doesn't seem to be much motivation to trade. The client sentiment indicators could be helping to protect and preserve my capital. And with all that being said, it is just about time to wrap this one up. I hope everything was clear and easy to understand. You should investigate these indicators further for yourself, practice with them, and decide if they have a place in your trading strategy. But just before I go, here is that special promo code I said I would give you earlier. Visit www.TIOmarkets.com and use promo code YT25bonus when you make your next deposit. This promo code will get you an extra $25 in trading funds, and you can trade them however you like. All the best, and see you in the next one.